and today I'm delighted that you guys have joined us for this Forex bootcamp. So if you are new in our trading session, each and every Friday usually have these trading sessions where we talk about everything about the Forex market, from market analysis to trading strategies to beginner classes. And for today I want to handle all those beginner traders that are out there so that we can explore this world of Forex together. So today I wanted us to have a very quick crash course about the Forex market so that at least usienda kugonga kuivonje. So let us start from from the basics of what Forex is. When you hear somebody say that it's a Forex trader, when you hear somebody say that it's a Forex trader, what does that person really mean? Okay? Now the word Forex, this word Forex is a short form of foreign exchange, and Forex is the buying and selling of currencies in a foreign exchange market. So that means that anytime you hear that a trader say that is a Forex trader, he will basically be buying and selling currencies in a foreign exchange market. Okay? Now, secondly about the Forex market is that this Forex market, it is the largest financial market in the world, and more than $7 trillion are traded each and every day. So that presents a very good opportunity for me and you to be able to take a piece of a cake in the Forex market. In addition to that also, this Forex market also happens to be the most liquid market in the world. It is the most liquid market in the world. So that means that it has that easiness to buy and to sell, as well as when you make your money, be it you have made your $100, $1,000, or any amount of money you have taken, the moment you close that trade, that amount is credited to your account. Okay? Now, the other thing that you should note about this Forex market is that the Forex market is decentralized, meaning there is no centralized point of exchange, and as a result, trade are conducted over the counter through bank networks. So, anytime that you hear, what I mean by saying that the Forex market is decentralized is that there is no physical address or a physical building whereby you can come and say this is where the Forex market is usually traded. Because the Forex market, what all Forex traders usually do is that we participate in the online Forex trading. Okay? Now, there are various reasons why people prefer this Forex market over these other markets such as the stock market and the crypto market. Now, I wanted us to explore some of the reasons why would you as a Forex trader, why would you as an aspiring Forex trader, why should you consider this Forex trading over even stock market or over the crypto market? Okay? Now, one of the reasons why you should consider the Forex market is we have a wide range of instruments that you can go to trade in the Forex market. Forex traders, they are not only limited to buying and selling of currencies. Okay? They can be able to buy and sell different trading instruments such as metals such as gold, silver, aluminum. They can also be able to trade crypto or cryptocurrencies. Cryptocurrencies are digital currencies such as the Bitcoin, the Ethereum. You can also be able to trade indices. You can also be able to trade bonds. All those are the wide range of instruments that you as a Forex trader can be able to trade. Now, another reason why people prefer this Forex market over this other market is the ability to take long and short position. Now, what I mean by ability to take long and short position is basically the ability to buy when the currency is going upward, as well as the ability to sell when the currency is going downward. Now, this Forex market, we make money in both ways. If I do my analysis and I realize that this currency is going to appreciate in value, I just take my buy trade and make my own profit. On the other hand, if based on my analysis or based on my strategy, I see that this currency is going to depreciate in value, I can comfortably go to take my sell trade and make money. Unlike somewhere like in the stock market, whereby people usually make money when the stock shares, the value of the shares appreciate only. Like assuming we have like Safaricom shares, and Safaricom shares is at 20 Kenya shillings, and it appreciates in value to like 30 Kenya shillings. Now, in the stock market, this is only time people will be able to make money for stock market. But now, in the Forex market, we make we make money in both ways, whether a currency is appreciating or the currency is depreciating. Another reason why you should consider this Forex market is what we call liquidity. The Forex market is the most liquid market in the world. So that means that the liquidity in layman's language is the easiness to buy and to sell. The Forex market is the forex market is the most liquid market in the world. So that means that if you make like your $100 or any amount of money, the moment you close that trade, that amount will be credited to your account. Another reason why we prefer this forex market over these other markets is another reason why I prefer is what we call the spread. Now, another reason why I prefer this forex market is because the forex market is open 24 hours, 5 days in a week. Okay, the forex market is open 24 hours, 5 days in a week. It will open from Monday saa sita za usiku and it will close Friday saa sita za usiku. Now you see, that presents a very good opportunity for you to trade in the forex market. You can be able to join like the forex market as well as with your main hustle, or make forex your main hustle as well as have other side hustle. Because since it's open 24 hours, 5 days in a week, depending on the strategy you're using, you always get opportunities for you to be able to trade in this forex market. Now, another reason why you find that people prefer this forex market, another reason, so the forex market is open 24 hours, 5 days in a week. Now, another commonly asked question when it comes to the forex market. Sorry, 1 minute. So another reason why people prefer this forex market is that apart from being like the largest financial market in the world, you have so many trading opportunities, as well as it is easily accessible. This forex market the accessibility to it is easily accessible to anyone. You just need to create an account with a forex broker, as well as you just need to open an account with a forex broker, as well as just have internet. That's how simple it is for you to be able to access this forex market. Now, as you are doing this introduction about the forex market, I also want to encourage you, if you have any question, kindly comment there, comment all the questions that you may have, so that I'll be able to answer some of the questions as we are exploring this world of forex together. Now, the next question that people usually ask so much about this market is, what is actually traded? When you hear somebody say that is a forex trader, is that trader only limited to buying and selling of currencies in this forex market? Okay. Now, for the traders, us as forex traders, we are not only limited to buying and selling of currencies. We can be able to buy and sell different instruments, such as we can also be able to trade. One of the instruments is currencies of different countries. We have over 40 currencies. You as a forex trader can be able to trade, and then you can also be able now to include metals such as gold, silver, aluminium. You can also be able to trade the crypto. You can be able to trade the bonds. You can also be able to trade energy such as the US oil. So for the forex traders, they are not only limited to buying and selling of currency. So it is also a very good opportunity to do. Me mechanical forex trader, if I go and do my analysis, and on the currencies, I find that on the currencies I don't see any trading setup, I can easily go and check on the crypto. I can easily go and check on the bonds. I can easily go and check on the indices. All this to help me to be able to get trading. All this to help me to be able to trade in the forex market. Okay. Now, another question that is usually asked in the forex market is about when is the best time to trade. Are you new in this forex market, and maybe you've been wondering, is there a best time to trade in this forex market? Okay, this is now the question that I want to answer about when is the best time to trade. And for me to be able to answer this question, I want to answer it in 2 ways. Okay, I want to answer it in terms of trading sessions, as well as I want to answer it in terms of trading styles. Do you have like a specific date that somebody is able to trade in this forex market? Okay. Now, let me start with this, the most basic one about the trading session. Now, in the forex market, we have 4 main trading sessions. These trading sessions include, we have the Sydney, we have Tokyo, we have London, and we have the New York session. So these are the 4 main trading sessions. We have Sydney, we have Tokyo, we have London, and we have the New York. These are the 4 main trading sessions. And we are saying that these trading sessions, they're usually named after major cities in which most of the transactions are usually carried out. Like, if I talk about Sydney session, Sydney represents the Australia and those countries around Australia. And if I'm talking about Tokyo, Tokyo is also called the Asian session. It represents the Japan. Tokyo is the capital city of Japan, so it represents Japan and those Asian countries. When I talk about the London session, London is the capital city of United Kingdom. So it represents the United Kingdom and those European countries. And lastly, we have the New York, which represents the America. Now, I'm trying to answer this question of, is there a best time to trade when it comes to this forex market? Now, the first thing we have talked about is about this trading session. What happens is that when you go to trade when this trading session are open, the market usually has volatility. Volatility is what volatility is. The price keeps on changing. The price of the different countries keeps on changing. Remember, this is a time when these traders are most active in the market. The banks, the commercial banks, the companies, the corporations, the hedge funds, small scale retailers like us. This is a time when all these trading participants are most active in the foreign market. So, assuming like the Sydney session is open, we are saying Sydney represent Australia and those countries around Australia, okay, in that time zone, such as the New Zealand. Now, if I go to trade when like Sydney session is open, okay, and maybe I'm trading the currencies such as AUD/USD, maybe I'm trading currencies such as AUD/USD, AUD/CAD, AUD/JPY, maybe I'm trading these currencies such as New Zealand USD, CHF, New Zealand CAD, okay, during Sydney session. This is the time when these participants are most active. Like, if you look at right now, we are always 10 hours ahead of, Australia is 10 hours ahead of us. So if right now is at 2, in Australia it's around maybe 2 p.m., 2 a.m. In Australia it is 2 a.m. You know. So what happens is that right now the banks in Australia have been closed. You know. At the same time, London session is open because we are just 2 hours ahead of London. You know, London, I think that we are 2 hours ahead of them. We are 2 hours ahead of London session. You know, like right now, this is the time when the banks in the London, in the United Kingdom, as well as in the European countries, this is the time that they are most active. You know, so what happens is that right now, if you go to trade currencies such as the GBP or the Euro, this is the best time to trade them because the participants in the market, they are most active. So that results with more volatility. So for that person that has been asking about when is the best time to trade, we are supposed to know about the trading session. This one will help you to understand now which currencies to trade at which particular time. Now, the other thing now, let's talk about the trading styles or the different trading strategies that people should use. Now, we have 4 main trading strategies. We have scalping, we have day trading, we have swing trading, and we have position trading. These are the 4 main trading sessions. These are the 4 main trading styles: the scalping, the day trading, the swing trading, and the position trading. Now, these trading styles, let us first of all explore these trading styles. Now, let's talk about scalping. For the scalping, for the traders that are using the scalping strategies or they are using the scalping as a way of analyzing the forex market, the intention is to enter and exit the market multiple times in a day. So for our scalpers, for these scalpers now, the intention is to enter and exit the market multiple times in a day. So for them, we find that for this type of traders, they are basically targeting market maybe move, like they are maybe targeting like 5 pips, 10 pips, or 15 pips for each and every trade they take. Okay. Now for this type of traders, they enter and exit the market multiple times in a day, and you find that for traders that are using this scalping, there are time frames that they usually use for analyzing. They usually use the lower time frame, like the 5 minute, the 15, the 5 minute, the 1 minute, 5 minute, and the 15 minute time frame to do the analysis. Now we have this one which we call the day traders. Now the day traders, these are similar to the scalpers, but for them they open the trades within the same day, but their trades will not run overnight. Okay. So, since their trade do not run overnight, you find that they are targeting slightly higher number of pips than the scalpers. We find that maybe they are targeting like 20 pips, 50 pips. The one that they know, they can easily achieve them within the day. Okay. Also, you find that for these day traders, maybe the time frame that they're using for analysis, they're using like the 30 minute, the 1 hour, and the 4 hour time frame for the analysis. That's the time frame that the traders usually use for analysis. Okay, for this one, we have said the difference between the scalping and the day trading. For this trader, his trades do not run overnight, and for the scalper, they are entering and exiting the market multiple times in a day. Now, the other type of traders, or what the trading style, is what we call swing trading. Now, swing trading, for this type of traders, for this one, they can hold trades for several days to several weeks. Okay. Now you find that when it comes to swing trading, they are targeting even high number of pips than the day traders and the swing traders. You find that they are targeting like 100 pips to around even like 300 pips, the one that they know they can easily be able to achieve them within several days to several weeks. Okay. Now the last type of traders is what we call the position traders. And for this type of position traders, they are what we call the investors. For them, they use, first of all, they use the highest time frame, such as the monthly and the weekly time frame for the analysis. Secondly, they have no issue holding trades for several weeks to several months. And what happens at the end of the day is that, as a forex trader, you need to identify one or two trading strategies that resonates with you, and then focus on them. Now, surprisingly, all those trading strategies that are out there, they either be for scalping, for day trading, for swing trading, or for position trading. All right. Now let's now go back to this question of when is the best time to trade. Now, if you are a day trader, or if you are a swing trader, or using position trading strategy, this information is not that relevant for you. When is the best time to trade? Because for you, you'll just be doing your analysis and waiting for the setup to come to you and pull the trigger. Okay. But now this trader that is called the scalper, the trader that is using scalping strategies, for him, because he's entering and exiting the market multiple times in a day, his intention is to take advantage of, and his intention is to enter and exit the market multiple times in a day. So for him, you want to know, is there the best time to trade? Now, what happens is that if you're using like the scalping strategies, this information about the trading session is very important for you as a forex trader, because you want to know if right now you're having the random session being opened, which is the currency that I should be trading. For example, right now the random session is open, and so that means that if I'm trading any currency that has the Great Britain pound, if I'm trading any currency that has the euro, this is the time that they are most volatile. Price keeps on changing. So for that scalper, since I target like 5 pips, 10 pips, each information varied sana kwake. Okay? At around 3, the New York session will be open. That's when the banks, the companies, the corporations, the hedge funds in the US will be opening, and the forex market will have more volatility. So for the scalper now, they will change their currencies from trading maybe the euro to trading any currency that has the dollar in them. I don't know if you have been able to understand all this question. So that's all about the trading session. So I've been able to answer, I've been able to capture, I've been able to show you the introduction about the forex market, about what is forex, what is trading the forex market, who are the traders in the forex market, and when is the best time to trade. Now we can move on now to the other interesting concept of trading, whereby I wanted us to explore some of common terminologies that are used in the forex market. Let us look at some of the most common terminologies that are used in this forex market. Remember, this one is just but a brief introduction about the forex market. If you have been following us for quite some time, each and every trader usually have this trading session that usually talk about the forex market. The other one that we have been focusing more on the trading strategies. We have been focusing more on the trading strategies as well as trading psychology. So today we're just having a small but introduction about this forex market, and let us continue. So I wanted us to look at some of the most common terms and terminologies in the forex market. Because you don't want to be maybe in a meeting of forex traders and then they are using some terminologies and lingos and you don't understand anything. Umetatua people kwa meeting of forex traders una hang. So in any field you decide to pursue, be it you are pursuing like law, you are pursuing medicine, you are pursuing rocket science, on any field, there are various terms that are used, and that terms, they are peculiar to that particular field. There are terms that lawyers will use, and if you have not done law or you have not done in that line, you will be able to understand what they mean. There are various terms that doctors will use, and maybe if you have not gone through the medicine class or the medical classes, you will be able to understand what they mean. Likewise, now there are various terms that are used in this forex market, and these terms they usually like the language of the market. Any trader out there will tell you that these are some of the most common terminologies. Now the first one is pip, pips. Okay, I don't know if you have ever heard a trader say, "Hey, this trade may capture 50 pips," this trade has moved 50 pips. I don't know if you have ever encountered this word. Okay, now pip is the smallest unit in which a currency pair can change, or in a layman's language, pip is change in price. Let me give you like a very good example. Assuming you have like euro, assuming you have like USD card, and it is at 1.3410. Okay, if it moves from maybe 1.3410 and it goes to 1.3450, this one is a difference of 50, right? Now in the forex market, you can say that this currency has moved 40 pips. Okay, this currency has moved 40 pips. Okay, so pips is basically change in price. Another commonly used term in the forex market is bullish market. Now, bullish market, it means that the market is either going, bullish market means that the market is going up. This is how a bullish market looks like in the forex market. In the forex market, price doesn't move in a straight line. Okay, it moves in a wave-like structure. So, just like you can never breathe in forever. So remember, usually breathe in, you breathe out, you breathe in, you breathe out. Now, in a bullish market, this is how the market moves in. But you can be able to see that at the end of the day, the market has been going upward. Now, the other common term is what we call bearish market. And for the bearish market, it means that the market is going downward. So, if you look at, like in this example here, you can be able to see this using this arrow, you can be able to see I'm showing you a direction of the downward. So a bearish market, it means that the market is going downward. Another commonly used term in the forex market is what we call trending market. This one is also one of those commonly used terms in the forex market, or we call it trending. Trending, see what you have been used out here kusema ati msifanye na trend. In the forex market, trending, it means that the market is either going up or down. So that's the meaning of the word trending market. The market is either going up or down. So if you ever hear a trader say that, hey Mazejo, Euro USD has been trending for quite some time, okay? On that one, it's not specific. It's not specific whether the currency is going upward or downward. It's not specific whether the currency is bullish or bearish. But when you hear a trader say that the market is, so when you hear a trader say that the market is trending, it's not specific. So that one is upon you to go and check, okay? Now, the last commonly used term in the forex market is what we call engine market. Now, the engine market, it means that the market is neither going up or down. Basically, market is trapped in a range. It's like it is trapped in a range. The engine market is also called sideways market. And the forex market moves in three ways. The market can either be bullish, can either be bearish, or can either be ranging market, or what we call sideways market. Now, these are some of the most commonly used terms in the forex market. The last one, I think, the other that we can talk about is what we call take profit and the stop loss. These are the ones that so let us look at this term called the take profit or the target profit and stop loss, because it's one of those commonly used terms in this forex market. What does take profit mean? Take profit basically is an instruction you give to the forex broker to close the trade for you if the market goes a certain number of pips in your favor. Okay? Let me show you. Assuming I've taken a sell trade, okay? Assuming I've taken a sell trade, okay? And I'm expecting the price to go downward, okay? Now, by setting, like, assuming the price is at price of 100, and based on my analysis, I know that this price is going down to the price of 20, okay? Now, by setting this 20 as my take profit, I'm basically telling this forex broker to kindly close this trade for you. For me, if the trade goes and it comes to this particular price. That's why you say that take profits and instruction you give to the broker to close the trade for you if the trade goes in your favor. Okay, likewise, if I've taken maybe a buy trade and I'm expecting the price to go upward. Okay, so this is why I set my take profit, because I'm basically by setting this price as my take profit. If I've taken a trade at 20 Kenya shilling, maybe I'm targeting for it to come to 50 Kenya shillings. Okay, by setting 50 Kenya shillings as my take profit, I'm basically telling this broker, hey, I've taken this buy trade, expecting the price to come to price 50. If this trade goes in my favor, kindly close this trade for me. Okay. Now, on the other hand, now there is this what we call the stop loss. Stop loss is still an instruction you give to the broker to close the trade for you, but this time, if you are wrong on that analysis. Okay. Come on, like assuming I've taken my buy trade and I'm expecting the price to go upwards. You know, I might also be wrong on that analysis. So by setting a stop loss, okay, I'm basically instructing the broker, hey, I've taken this buy trade, I'm expecting the price to go upward. But in the event I'm wrong on this analysis and the price decides to go against me, okay, the moment it comes to this particular price, kindly close that trade for me. Okay? The same thing if I'm taking like a sell trade. You take a sell trade, expecting the price to go down. Now, if you set your stop loss in the while you are setting, stop loss usually on the upper side of the price, usually on the higher side of the price. So by setting a stop loss, I've taken a set trade expecting the price to go downward. Now I've set this price as my stop loss. Basically, I'm telling the broker, I've taken this set trade, and if I'm wrong on this analysis and the price decides to come upward, okay, kindly close this trade for me. Okay, so by setting this stop loss, you basically be minimizing your risk, as because the stop loss acts as your insurance. Because okay, do you have any question? Okay, so these are some of the most commonly used terms in this forex market. I wanted now to show you how we calculate pips, and then now I just wanted to show you how we calculate pips in the easiest way. Now, all currencies, we calculate pips from the fourth decimal point. So, if all currencies, we calculate pips from the fourth decimal place. So, if I'm having like, assuming I'm having like Euro USD, Nigakoi price 1 is to 2020. Okay? Now, when I'm calculating pips, I calculate pips from this. You find that in the market, it applies in internal, is the point internal. Okay? So, you assume this is the fifth one, and you calculate pips from this particular price. Okay? Now, all currencies you calculate pips from the fourth decimal point, like 1, 2, 3. For this way, you start calculating our pips. Okay? However, we have some exemptions. We have some exemptions whereby we don't calculate pips from the fourth decimal point. Now, one of the exemptions is any currency that has JPY or the Japanese yen. It can be something like GBP, JPY, Euro, JPY, CAD JPY, out JPY, CHF JPY, any currency that has the Japanese yen in it, we calculate pips from the second decimal point. Okay, you find that if I have like, assuming I'm having like GBP, JPY, you find that it is at 180.269. So I will assume this 9. Okay, so if it's at 180.269, I will assume this 9, and then I calculate pips movement from the second decimal point. This is the first, this is the second decimal point. Now, the last way in which you can go to calculate pips is the last exemption. We say that all currencies, first decimal point. The first exemption, any currency that has JPY, we calculate from the second decimal point. The other one now, any currency that has gold. Okay, it can be like gold USD, gold AUD, gold Euro. All these we calculate this from the first decimal point. I hope that one is clear. So anytime you see all those currencies, okay, if you are trading currencies from the first decimal point, if you are trading a currency that has JPY from the second decimal point, and if you are having gold, as your trading currency, any currency that has gold, it can be like gold USD, gold Euro, gold AUD, we are calculating from the first decimal point. Now, if you're having a laptop is very easy, because using the laptop will help you to calculate those pips in a very simple way. You just need to click on the crosshair and it will be able to calculate for you those pips. Now, if you're using a phone, okay, you have to know how to calculate pips. And unfortunately, for those people that are using phones for the analysis, for the pips you have to calculate them manually. So that's why I've mentioned this, so that you can always remember. All currencies